Well, as the very, very, very old song would say, what a difference a day makes. We have a very, very up market right now. Tesla up 6% last time I checked. The S&P up 4.5. And even though those are very strong numbers, and you can say that that was a continuation of kind of volatility. On the other hand, it just feels calm. I don't know why, but it feels calm. What's shocking is that the yields are back up almost to 4.25. Very hard to understand, except that the signal would be that the bond market believes that the economy is fine. Some are saying that that bond market is responding to the fact that central banks and sovereign wealth funds are selling the bonds in order to buy treasuries. Sorry, to buy gold. I'm certain that that's also taking place, but I don't know if it's enough in one day to get us all the way back from or a day and a half to get us back from 3.9 all the way back to 4.25. Anyway, let's get into the very, very light Tesla news this morning. Not much to talk about, but let me just start by saying that absolutely nothing and all of this nonsense, all of this craziness, all this back and forth, and no matter what happens with the tariffs, nothing has happened to change the robotaxi opportunity and the big Tesla payoff that's going to come as a result of it. It's only 2 months away. Nothing has changed. Nothing has happened, which changes the opportunity with Optimus. And according to, I don't know, guys like Dan Ives and some others who have recently cut their price targets, that's who the company is now. It's not about the automobiles. And yet, I don't even see that the automobile numbers are going to be that bad this year. As you know, I'm very optimistic about the automobile numbers because I think we're going to have unsupervised driving and grok in the car. Anyway, I, I don't know. I think that's why the stock is held up very, very well, actually, is the retailers get it. The retail investors get it. Excuse me so much. The retail investors get it, and therefore they're not selling. They're holding on. They're not going to sell before June. Elon Musk has been making some direct and indirect appeals, apparently, over the last 2 days regarding the tariffs. He is clearly in the anti-tariff camp. He's particularly concerned about the tariffs with Europe and with China. But most of the information that I've seen so far would suggest he's mostly talking about Europe, where he's recommending zero from on the Europeans do zero tariffs and we do zero tariffs. Again, we have to take into consideration, and I'll cover this again later. What Elon didn't say, and nothing in his commentaries have said, is it isn't just about the tariffs. And he should know this better than anybody because there's all kinds of other restrictions in Europe. Gary Black says this morning we got 3,600 insured registrations. 3,600 seems like a very, very low number. Well, that would be higher on week one of the second quarter than last year's week one, actually by 91%. So apparently last year we must have only done about 1,900 insured vehicles last year. And on the first week, see, because the first week, what do you think they're doing? Well, they're shipping them to Australia, Singapore, South Korea. I guess South Korea, the lines are out the door for people wanting the car in South Korea. I haven't heard much reporting on the other places, but South Korea in particular, they're dying to get their hands on that Model Y. So there you go. That was it on Tesla News this morning. This is Randy Kirk. Please like, subscribe, notify, etc. Treasury Secretary Scott Bessent's interview with Tucker Carlson just went viral. And he's not just talking about Trump's tariffs. It says he's exposing the truth about what happened to America's working class. This is if the Democrats don't get it. Most of the pundits don't get it. Almost none of the regular mainstream media get it. This is about restoring the middle class. This is about getting the United States back on track as a manufacturing nation. So here's what he said. Here's what you missed on the Trump's $600 billion tariff plan. It started with a bombshell. For years, the American middle class has been eviscerated. Now, let me just make a quick comment here. If you look at the real numbers, and I did this a few years ago and I've repeated it recently, what you've seen is not just the middle class eviscerated, but the good news is a lot of the middle class moved into the upper middle class. So it's not a one-way deal, but it does not take away from the idea that there is a large majority of people making under $100,000 a year that could be making more if we had a bigger manufacturing base. And that's what the idea is here. Those individuals are the ones who are feeling as if the American dream is no longer possible in America. And it just doesn't have to be this way. It can be solved, in my opinion. I don't know. Maybe it won't be solved. He says, Besson says, this isn't politics. It's backed by hard data. In the 2004 China shock, it says the 2004 China shock wrecked U.S. manufacturers, and the workers never recovered. Now the data confirms what many felt for years. While elites thrived, middle America saw declining life expectancy, collapsing local economies, and parents losing faith in their kids' futures. The Treasury's answer, the $600 billion tariff rethink. This would come mostly from foreign producers. So again, we get into this whole argument about who pays for these tariffs. All right, is it the consumer that pays? Is it the supplier in China or in Europe or in wherever, in Australia, in Canada, in Mexico? Is it the supplier that pays it? Is it the country that pays it? Or is it the U.S. consumer that pays it? Well, MIT did a study, and they turned out that the 20% China tariffs last year, or sorry, 8 years ago, well, maybe it's counting all of them. I'm not sure. Maybe counting the ones in the Biden administration as well. But the 20% China tariffs raised prices only 0.7%. So you might have heard me saying earlier this year that I thought that all of the result of all of the tariffs that are being contemplated right now, when it's all said and done, will raise the U.S. prices 0.8%. Now, that was before I knew about before I ever heard about the MIT data. That was from doing an analysis based on my years and years of experience as an importer-exporter. In the 10% scenario, the burden breaks down like this. If you took 10%, it would be 4% of that would be the producers eating it. 4% would be the foreign currencies absorbing it. In other words, they would change their currencies. And 2% would be what the consumer would pay. The revenue could offset domestic, and remember, it's only a small percentage of our economy. It's 14% of the economy. So if you take, in the case of the 20% last year, and maybe over the last 8 years, you take that 20%, which would be 4% to the consumer. You take that times 14%. What do you get? Okay. So the revenues could offset domestic taxes, but the real plan, this is important, that revenue that comes in, this is $100 billion, could offset, whether it reduces debt or whether you reduce other U.S. taxes, it would be a greater offset to taxes than it would be an increase to the cost of materials in the United States. The real plan goes beyond raising money. The goal isn't endless tariffs, it's reshoring. Bring the factory here is Trump's real message. Initially, tariff revenues will be substantial, but as factories relocate to America, two things will happen. Number one, tariff revenues naturally decrease. So therefore, the $600 billion might be $500 billion or $400 billion as we do more and more here. And then two, domestic tax revenues increase from new jobs and business activity. So even if we put in the new tax reductions to the middle class by having no taxes under 150,000, and even if we have the tariffs, even if we reduce the taxes on business, you're still going to have more after those decreases than you would have if you didn't have the increased activity. Does that make sense? We're going to reduce those taxes anyway. So if we have more activity, we're still going to get more from the U.S. businesses than we would otherwise, and even from people that make more than $150,000 a year. This represents a shift in economic priorities. Wall Street's done great. It can continue doing well, but it's Main Street's turn. This captures the core philosophy behind the tariff strategy. This is the Trump plan. Bessent highlights a stark reality he witnessed firsthand during 2023. Record numbers of Americans took European vacations. Simultaneously, food banks saw unprecedented demand, not from the homeless, but from working families. As Bessent notes, that's not a great America. The reason for that, of course, was because the inflation was destroying those middle-class families. And the solution isn't handouts, he says. We're not going to use the Democratic compensate the loser approach by just sending them money. I don't think the bottom 50% of Americans are losers. The system has not worked for them. The globalists, which we've been talking about for 20 years, have taken away their livelihood. His vision is about fixing a broken system using smart tariffs. Economic security is a national security. While implementation might be bumpy, Bessent compares it to Reagan's initially controversial policies during the first 2 years. The team believes America's economic landscape will change within this 4-year period. All right, so and now you're back to hearing from Randy Kirk. This is my commentaries over the last 2 days. This on X. The stock market is now 100% news driven. Right now, that's all. It's not about the fundamentals. It is not about the technicals. It is almost impossible to play in this type of market. This is not investment advice. Don't try to buy low, sell high in this market because you don't know what the news is going to be tomorrow. Now, maybe you do. And this channel is all about the combination of the news and the fundamentals and the technicals and trying to weave through that. And I agree. I got it 100% right yesterday when I said the market road to rebound. I believe I'm also going to be right. And you'll hear more about this in a minute from Tom Lee. We're gonna recover the entire 10% that we just lost over that 2 or 3 days. It'll be back. We'll be back to a 10% correction, which is what I believed and have said for 6 months is what the market needed. But that's going to be all about the news. It's all about the news right now. So Tom News is apparently watching my channel because Lee is now predicting that the market will return to the S&P will return to 5,500, and that the market will not get back to all-time highs for quite a while. This is exactly what I said, as those of you who were here yesterday know. And as the fear lifts, then we'll get back to those all-time highs. We got to get rid of this initial fear. That'll get us back to 10%. And then as the overall market starts to recover, we start to be able to see the future where the business is fully recovered by October, as I said. Now, I'm not saying we're going into recession. I'm saying we're going to have 1 quarter of down GDP. I could be wrong, but I think we'll have 1 quarter of down GDP, and it might turn out to be 2. Now, you're probably not going to be able to count Q1 where there's some suggestion we could be down in Q1. I don't think that's going to have anything to do with anything, but this forward effort, people buying us product ahead of the tariffs, is going to throw the number. You're going to have an asterisk on Q1 because of that particular activity. I also fundamentally disagree with Tom that China might keep up their negative position. I believe they are waiting and waiting and waiting for an ultimate deal. They're going to watch everybody else, see what's going on, and then they're going to make a deal. And by the way, she might not pick up the phone. You know what? Trump will. That's who he is. That's who Trump is. He'll pick up the phone if necessary. He's not proud. He wants to get the deal done. He wants to win, and it has nothing. People think that Trump and Musk have big egos. No, they have really good egos. They know who they are. They know what they're capable of. They've seen success, and they know how to work that. They know how to work within the system to get that success. Yahoo Finance gets the next 2 articles this morning. U.S. consumer borrowing unexpectedly declined in February for the first time in 3 months, reflecting a sharp pullback in credit card balances and a decrease in motor vehicle and other non-revolving loans. That would, generally speaking, be something that you would consider to be good and bad. So Are they buying less cars? Well, there was evidence that at the end of the quarter, at the end of March, there was a lot of new car purchasing. So I'm not sure how that didn't make it into these numbers, but maybe, oh, this is February. Ah, February. This is old news again. I mean, it's the newest news we have, but it's February news. I don't know why that's so far behind. Why don't we have March news on this? Anyway, total credit fell nearly 810 million after a revised 8.9 billion gain in January. The median projection in the Bloomberg survey called for a $15 billion rise, but we did not get that. We got much less than that. Outstanding credit card and other revolving debt edged up by 128 million, which is zero. It's like nothing. And school tuition declined, all declinings. The figures indicate American households were starting to grow more cautious in February about their debt loads. Concerns about higher education and personal finances have since continued to mount due to President Trump's tariff push. But again, I've heard, I believe it's true that, again, tariff worries pushed people to purchase cars in March. Moreover, an abrupt and sharp plunge in the stock market risks causing the most creditworthy and high-income borrowers to become more guarded in their spending and borrowing. Economists see much greater odds now than they did months ago of a recession. Yes, economists and major banks are talking about a 60% chance of a recession at this point. Stress among lower-income households was already starting to build in January. The share of subprime auto loans over the last 60 days became past due, jumped to 6.56 in January. January. Can't we have greater news? Anyway, Monday's consumer credit report showed still elevated prices and high borrowing costs are challenging household finances. The average rate on credit card accounts with assessed interest was 21.91 in February, still close to the highest in Fed history. Yahoo Finance also had this story this morning. The National Federation of Independent Business People's optimism did what? Did it go up or did it go down? Oh yeah, we estimate we all knew what was going to happen here. It dropped by 3.3 points in March to 97.4, marking the biggest monthly decline since June of 2022. This was above economists' forecasts, which predicted a reading of 99, which they said was above 99, and it was 97.4. No, it was worse than they predicted 99, according to Bloomberg data. This drop pushes the index below the 51-year average of 98, just barely. And I think that's probably just about exactly appropriate. Remember, this is going to be heavily skewed. Again, I've been in the bicycle business my entire career, my entire adult career at least, since 19. Let's see, I opened my bike shop. Well, even before I opened my bike shop, I was buying and selling bikes out of a garage. And that would have started in 1972. The drop pushed the index. So anyway, the bicycle people, obviously, they're going to get slammed if this happens. Most of the bicycles today and electric bikes are made in China. Yes, there are some that are not, but most of them are. So they're going to get, those bicycle retailers are going, whoa, what's going to happen to us? The implementation of new policy priorities has heightened the level of uncertainty among small business owners over the past few months, according to the chief economist at NFIB, Bill Dunkelberg. In early March, Trump rolled out the first phase of his new tariff plans, putting levies on imports from Canada and Mexico. Small business owners have scaled back expectations on sales growth as they better understand how these rearrangements might impact them, according to Dunkelberg. Tuesday's data showed the drop in optimism, largely driven by a 16-point fall in expectations for better market conditions. The NFIB's uncertainty index also fell by 8 points. Yeah, the uncertainty is really the key. Expectations for business conditions and sales continue to slide. The percentage of owners anticipating better business conditions dropped 16 points to just 21%, marking the third consecutive monthly drop. Additionally, the number of owners expecting higher sales volumes fell 11 points. And notably, the report did not mention tariffs. Among the owners who reported lower profits, 35 blamed weaker sales, 11% said the decline was due to increased costs of materials, and 8% cited labor costs. Labor remains a challenge, with 40% of the owners reporting unfilled job openings, up 2% from February. Meanwhile, only 12% of owners plan to create new jobs in the next 3 months. This is a 3-point drop. As the deck chairs continue to move, it will be a turbulent time, even on Main Street, 𝐂𝐦𝐚𝐢𝐥 said. All right, this is me again. I want to just repeat. I might have said this yesterday. I'm going to repeat it. Maybe I'll repeat it tomorrow too. Trump's formula isn't that hard to understand on the tariff deal. Number one, lower he wants countries to lower their tariffs to the same as or lower than U.S. tariffs. But that isn't it. That's not enough. That's what he told Vietnam yesterday. That's what he's telling everybody. That's not enough. You can't just be the same on tariffs. If you have other trade barriers, which they all do, then you have to lower those as well to give American companies at least a chance of getting the products into those countries. And as much as he'd like to see American products moving into those countries, it isn't just about those American products. It's also about trade imbalance. He doesn't like to see these huge trade imbalances. He says, so if it's not going to be, U.S. cars or U.S., products, Tesla cars, whatever, maybe then throw in a promise of buying X amount of oil, gas, or agriculture from the United States. You got to buy the oil, gas, and agriculture from somebody, so buy it from us. Because these are all commodities that have an international price. If you buy it from Turkey, you're going to pay the same price for oil as you're going to buy it from us. So this is what he said last Wednesday. This is what I've reported. The entire mainstream media and 100% of talking heads are trying to figure out what he meant, but that's what he meant. And that's what he continues to say in every negotiation. The market fell not because Trump stuttered. He didn't. It's because the idea is, and it's not because the idea was lacking merit. The markets collapsed because the reporters and the pundits totally missed it. So therefore, I'm still expecting what I'm seeing today. I'm expecting the recovery to be a total V shape, which is what we're saying today. This is not a dead cat bounce, and this is not a relief rally. This is almost like what we see with Tesla all the time, where the market overshot because they were stupid. This is a knee-jerk reaction like we sometimes see when reports come out in the morning and then they recover during the day because everybody looks and goes, oh, we got the report wrong. We looked into it in more depth. So we're still going to have to take our medicine. That's why I'm predicting we might have a 1 quarter negative GDP. We might have 2 quarters of negative, or we might just have really, really flat GDP for a couple of quarters. We have to take our medicine. We overspent on foreign goods and we overspent in government spending, and we have to recover from having done that. This is breaking right now. Bill Ackman says some have misinterpreted my thoughts on tariffs. I'm totally supportive of President Trump's using tariffs to eliminate unfair trading practices of our trading partners and to induce more investment and manufacturing in our country. There you go. I'm advocating for but what he's advocating for is a 30, 60, or 90-day pause before the tariffs are implemented. And that's in order to enable the negotiations to be completed without major global economic disruption that will harm the country's most valuable companies and the citizens of our country. So I think this is what's going to happen, but it's going to happen later today, at the end of the day, maybe even tomorrow morning before markets open, maybe not until markets are open. And it might be country by country that he gives a pause. We'll see. And I think that we'll hear more from China probably today, maybe tomorrow, and China might even wait till Friday. If a country does not negotiate in good faith, then the real Donald Trump can bring the hammer down, but doing so without giving time to make deals creates unnecessary harm, he says. So that is what is going on with all of the news. Now we have Tesla up almost 7% this morning, bordering on $250 a share. We have got the Dow Jones up 3.61. We've got the NASDAQ up 4.14. We've got S&P up 3.67. And there you go. This is exactly what I predicted. Exactly, precisely. Tesla, I'm sorry, the Magnificent Seven are all up extremely strongly. You got NVIDIA up 7.36. Yeah, you go, Larry. Larry bought yesterday morning. So good for him. And then we've got the Cathie Woods, which will also all be up 100%. Again, 4%, 4%, 3%, 6%, all up strongly this morning. All right, so that's the reaction. Let's go ahead and the bond market, we already know. I already mentioned it. It's horrible. I can't understand it. Well, I do understand it. I understand it, but I don't like it. So we've got the bonds back at 4.243, just under my 4.25. I think that will hold. I hope it'll hold. I believe it'll hold. That's what we're going to hope for, is holding at 4.25, not going above, and then slowly but surely going back down. So it's up 8.4 basis points. Whoops, darn. Let's go back. I'm sorry to hold you up here. Here we go. All right, so we've got the 2-month also up slightly, 0.7. The 2-year up even more, 10.3. This has been commented on, is that the 2-year is moving up much faster than the 10-year. That'll be interesting to watch for the next couple of days. We've got oil up 93 cents this morning at 61.63. That is still, I think, I don't think it's going to continue to just climb, because I think that's where it should be anyway. Brent at 65.06, and natural gas unchanged this morning at $3.65. Gold up $54, back over 3,000 at 3,028. And silver back over 30, up 2.62% at $30.38. Copper also up 0.91, but nicely in a much nicer place than it was when it was 5.15, sitting at $4.22 this morning. The dollar is climbing. As Tariff talks calm global markets, the dollar is climbing because people are now figuring that those tariffs are going to be true. They're going to hold, but they're going to be better than what people expected. And the dollar is firm. So there you go. Bitcoin up 1,020 at 79,337. Still under 80,000, kind of one of those round number things. And there you go. That's where we are this morning. This is a Tuesday, so it'll be Nicholas Gibbs later today. I'm really looking forward to talking to Nicholas tonight. I'm sure you're very interested to hear what Nick has to say about all this. And then it'll be Brian White at 7:45. I'm going to encourage you to go back and look at Brian White's video I did last night, which was, as always, extremely interesting. And so there's the card right there for that. And is there anything else I need to tell you? Oh, yeah, like, subscribe, and hit notify. Join as a member or join as Patreon. It would be very helpful to the cause. It's been great, as always, talking to you.